Okay, in continuation of our relocation series, today's topic is a bit more complex, which is understanding the numbers. And let me start off by saying in this video that, when someone's relocating, it's not only about the numbers, though it's important to understand the numbers and to determine if it makes sense or not. And what I mean by that, it to me, when someone relocates, it's more than just the numbers because when someone does so, it's because they have a true need or desire to move, right? It could be, the children are a little older and would like to be closer to grandparents so they can, be more engaged and involved in their lives. Or it could be grandparents moving closer to the grandchildren. Or it could be moving into a larger home because now the family's grown and, comfort is important. Or it could be the school district, wanting a better education for the children. So there's always, or I would say there has to be something greater than the numbers to make someone want to move. And, as a company, as a real estate professional, and our team and our specialists in our relocation department, when we discuss this with you, we're looking for that type of motivation, that type of need or want to make sure that it is worth for you to go through the whole process of relocating. Because for us, it's not only about the numbers. We focus on your wants and needs and help you uh, fully understand, the whole process and what it entails, including the numbers, just so you can determine if it's worth doing for you. Okay, so as we go through these numbers, keep that in mind. This is not to persuade anyone to make the move. Though, if you're thinking of making a move for a very good reason or reasons, as I mentioned earlier, hopefully from this video, you'll appreciate the numbers a bit more, and then you can weigh your wants and needs versus the numbers and come to your own conclusion. And if you're in Southern California, make sure you reach out to us here at Casa Realty Group because we do have specialists to help you with this relocation process. Now, if you're outside of Southern California, look for a good company, a good agent, and I'm sure you'll be in good hands. All right. So let's start with the numbers. If someone's relocating, and let's start with the first group that we've made some videos on or discuss, which is in this case the generation, right? It's usually the older millennials, on the younger side, the Gen Xers, individuals looking for their either forever home or bigger home, different neighborhood, different school district. With these individuals, in most cases, right now, where they're at and where they own their current property, uh, in most cases they have a maybe an interest rate if there is a mortgage on the property, which in most cases there is, anywhere between the interest rate anywhere between maybe 3 to 4% in that range. So that's the first part in understanding the numbers is what's your current rate. Second thing we need to look at is what's the current equity in your property, right? And statistics tell us that right now, if you're an older millennial, a younger Gen Xer, and you've bought your property in the last 12 years, your current property, you're sitting on anywhere between 30% to 50% of equity, which is significant, right? Now, the third number we look at is the appreciation factor on your current property. Having these three numbers, we can usually calculate the return on your current equity using that appreciation factor. And of course, the interest rate is the cost of the money for your mortgage right now. So that's where we start. Now, the second set of numbers we look at, once we understand your wants, needs, and true motivation for moving, uh, we look at your desired neighborhood that you're planning to move, the type of property, Let me give you an example. A two-bedroom current home that you live in, you like to move to a three-bedroom home. We look at that because three-bedroom homes tend to be more in demand than a two-bedroom home. And that, of course, on the home that you move to next, if that is the case, the first number we look at there is the appreciation factor, right? How much more in demand are three-bedroom homes versus your current two-bedroom homes, or a different neighborhood? There's even in certain cities, for example, we're in the South Bay, Southeast area, the Los Angeles basin. There's a total of 88 cities in LA County. And certain cities like Torrance, I believe they have 5 or 6 zip codes. And believe it or not, among these different zip codes, the appreciation factor is all over the place, right? You may have one zip code, same city, different zip code, appreciation factor may be 14%, whereas in the same city, a different zip code, the appreciation factor may be 9%. So we study this and we will share this information. So the first thing that we look at is that the appreciation factor on the next property. Now, second item that we look at as far as numbers is, okay, if you go from this home to the next, you transfer your current equity of 30 to 40% to your next property, the financing. What would be the true cost of the financing on the replacement property? Not only the interest rate, the note rate. Let's suppose you go from a 3.5% interest to a 7% interest, right? That's 3.5% more. So we do the math, right? What is the true cost? Because in your current home, it may be that you have mortgage insurance. And the mortgage insurance factor, even though you have a lower rate, may be, close to, if you have an FHA loan, if you bought with an FHA, uh, you may have it's close to 1%, the MI factor, right? So that'll get you closer to 4.5. So we look at that on the replacement property. Of course, you're going to transfer your equity, so you're not going to have MI because in most cases you'll be able to give 20-30% down to keep your payment lower, get rid of mortgage insurance, and even though the rate may be a little higher, the cost of that money. We look at the true cost, not only the note rate, right? So that's the second number we look at. The third number we look at on the replacement property is the long term, not only the current appreciation factor, though the potential for long term appreciation. We cannot legally or ethically say we can predict the future, though we can use past performances, last 10, 20 years in certain neighborhoods, and what may be happening in a certain neighborhood with jobs, different construction, different things, and we can have an idea what may be happening in the future. So we look at that. Okay. Now, when we look at these set of numbers on both sides, again, it's not to persuade you to move because that's a very personal decision, and you do need to have a true want and need, as I mentioned earlier. Though we cover this because it's good for you to know that if you were to make this move, what it makes sense, not only short term, but also long term. Okay. Now, there's other factors that come into play. In a video like this, it's very challenging to go into more detail. Though giving us a call, putting a message or comment in the notes here, setting up a meeting with one of our specialists, we'll go more in detail to your specific needs, your specific numbers. And, an example of some other factors may be, Section 121. As I mentioned, most of you are sitting 30 to 40% equity. How do you move that equity from one property to another and not have to pay capital gains tax? Because I think we all know that after 1 year, it's long-term capital gain tax that's due on any gain, right, from when you bought the property to what you sold the property for, and that's under Section 121. So those are specifics that we like to cover in a meeting with you pertaining to you, the potential of you relocating. Okay, so now I like to speak about the numbers relating to the largest group of those that are relocating, which are those that are 60 and above in age. And this group, there's different factors that we're going to review here. And as far as the numbers, how they apply to these factors. And the first factor that we look at is the property tax. In most cases under Prop 13, a lot of these individuals that have owned their properties for over 25 years, they're paying low property tax. So that's the first number we look at on their current home. And then we look at, okay, if they were to relocate, as so many are doing, under Prop 19, how would their property tax look like on their next property if they buy within California? Again, under Prop 19, there's 58 counties that these individuals could move to, and to be able to transfer their current property tax assessment to their next home. So that's the first set of numbers we look at, because we know that in most cases these individuals don't have a mortgage, and their biggest expense, at least relating to the property itself, right, is the property tax. So that's the first set of numbers that we look at. Now, the second set of numbers that we review with these individuals is capital gains. Because I think we can all agree, 25, 30 years ago, this is being filmed in LA County. The average sales price was probably between 100 to 120,000 30 years ago, right? Or even a little less than that. And now these properties may be worth $1 million. So, from 100,000 to $1 million, that's 900,000 potential what? Capital gain. So what we do, and again, ethically and legally, we disclose we're not tax accountants or CPAs, tax individuals. We do advise everyone to speak to their tax people, though we can give some general information. And under federal law, we have Section 121, which exempts up to 500,000 from being taxed as capital gains. Okay. Now, the benefit for this group, and maybe that's why so many are taking advantage of the relocation today, is that any amount in excess of that first 500,000 of gain, that's exempt from capital gains. Anything above that will be taxed as capital gain at the federal level based on the income, and the lower the income, the less tax, sometimes probably no tax, and at the state level based on the tax bracket. Now, a lot of these individuals are either retired or semi-retired, so their income is less. So they're saving a lot of money on that excess amount that they would have to pay on capital gains from that 500,000. Okay, so these are numbers we would do with you, again, not as tax professionals, as realtors, giving you general information, and then you can always check with your tax professionals, all right, to confirm the numbers, how they apply to you. Okay, now the third number we look at is the cost of living. Depending on the county, there's certain counties that are more expensive to live in. And, LA County, Orange County, those are just two that come to mind here locally. That really affects someone's ability to maintain their household with the income that exists, right? It could be the size of a property, right? A two-story home, 3, 4 bedrooms, even if it's a one-story, anything above 1,000 square feet, to the utilities tend to be higher as well. So we review the actual cost of living, and then we look at, okay, if someone was to relocate either in California, any of the 58 counties taking advantage of Prop 19, or outside of California, and if it was to a smaller home, or again, the local cost of living is less, what are the benefits there? Financial benefits, right? To accommodate you as far as your cost of living, where they're less, right? And also, On the fourth item we look at here are what we call reserves. I think, all of us, regardless of our age, right, we're all planning for retirement. And some of these individuals that are relocating, again, the largest group, most of them are already in retirement. And they may be looking at how to add money to their retirement account, right? So when selling a property, and relocating either to a different county in California or outside of the state, finding something that's a lot less in price, paying cash for it, and being able to sell the property that you currently have for a lot higher, then the difference between what you sell and what you buy, you can put that money away towards your retirement fund. So that would give you a bit more peace of mind that you can add anywhere between 300 to 800,000 in most cases into that account while being able to buy your next property cash. Okay, so I hope this video has helped, regardless of what generation you're part of, that understanding the numbers and everything that is in play. It's important to review with a trained professional. All right. Thank you for watching, and I'll hopefully see you on the next video. And if you haven't subscribed yet, please do so.